I also think that this ETH proof of stake yield is going to be revolutionary for the space. Because talking about DeFi, I suddenly think that we end up with this benchmark yield. Because if we think the world you and I grew up in, everything was treasuries plus, LIBOR plus, right? That's how you looked at risk. We don't have that, and we didn't have it when CeFi blew up. We didn't know what risk was risk. And now we've got this benchmark rate, and it feels like we're going to see the next wave of DeFi come.
Raoul Pal thinks that the bottom is in for crypto markets, and over the next decade we will see the entire space get to a $200 trillion market cap, representing a 200x from current prices. At the recent SALT Financial Conference held in New York, macroeconomic expert Raoul Pal sat down with Pantera Capital's CEO Dan Morehead to discuss why we are still so early to the crypto space, why the Ethereum merge is incredibly bullish, and also how we have only just seen the tip of the iceberg of institutional capital that is coming into the market. Make sure to stick around to the end of the video where Raoul and Dan discuss how they see crypto growing over the next decade and how it gets to billions of users as it exponentially grows. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
I think the merge is really big for our industry. And, you know, ETH prices were just kind of drifting as we were waiting for, when the merge would finally come, because it's been talked about for so long. But once the foundation set the date, that's when, Ethereum prices started to rally. And, you could imagine people are still, not 100% confident. But once we get through this, I think that's going to start a huge rally again, So I think it is really important for industry. And obviously there's some risks that something goes wrong. But as long as we get through this, I think we're on to the next cycle.
Yeah, and I just think that institutions love yield. And once you start establishing ways of valuing yield, you're going to bring a lot of other players. Because, one of the reasons people didn't adopt gold, even though the industry fought for years to get it adopted, is like the pension fund said, well, it doesn't help the yield that we need. And now we've got a Web3 asset, a digital asset that has a yield that's of significant size. I think it's super interesting.
It is. And, proof of stake is the way corporate governance works in every other security, right? One share, one vote. And so I think institutions will be able to get their head around, a proof of stake consensus model pretty quickly.
Any risks you see in this merge? So there's this point where not everybody agrees with us. We both think crypto's bottomed. I think the business cycle's pretty clear. We're going into recession, and I kind of think the rate situation changes. But a lot of people don't think this, so they're really nervous. What risk would you have to say your view's wrong, not just price going to new lows, but what would make you change your mind to think, actually, we've got another leg lower?
Yeah, so obviously if the merge doesn't go through flawlessly,
that would be bad.
That would be very bad. And then I think the biggest kind of existential risk that I worry about is still regulation. When we started looking at crypto many years ago, there was a long list of risks, a lot of things that could have gone wrong. And most of them have been taken care of. There's great custodians now. The code's been working for 13 years, all that. So most of the risks are gone. The only one that's still really concerning is the regulatory bit, and in particular in the United States, where there isn't enough regulatory clarity. So it's either forcing companies and projects to go offshore, which is unfortunate, or it's hampering innovation because people are afraid of negative consequences. The nice thing is that we're only down to one big risk anymore.
Yeah, I was just thinking through when you're saying that. You've been in this for a very long time. You were one of the first people really to see this at scale and build a business around it, which was amazing. And back then it was all risk and this potential. And you've gone through, as you said, almost all of the risks left. But it still feels that normally when you get to the end of the risk, with all of the quantifiable risks, the returns go down. But that doesn't feel like that's the point where we are. It feels like the returns still lay ahead of us.
Oh, I would just say that, this is such a big thing. It's going to take decades to happen. And so we still really are pretty early in it. And, often people say, it took the internet 20 years to happen. No, it took 20 years just to get to the browser, right? And then it took another 30 years, to get to where we are today. So, the internet's 50 years old, blockchain's 13 years old. So we're still really early. And so, yeah, theoretically, there will come a time where, the average IRR of our industry is going to decay down. But I think we still are very early. And there's still just such a small number of people that are engaged in this, maybe 200 million, 300 million people, something like that. There's 3 billion people with a smartphone, right? And I think it's pretty inevitable. Almost everybody on Earth with a smartphone is going to use blockchain in 10 or 20 years. I'm not saying it's going to happen now. And I was just on CNBC, and I followed up a U.S. congressman that had just the most reactionary negative view of Bitcoin. And the interviewer asked, had I caught, the previous comments? And, what did I think about it? I was like, it makes me wildly bullish. Like, if you still have people that have such reactionary, views, it means there's still more people to convert, right? So we're still really early in this trade.
Talk to me about the institutions and that adoption curve. The first people in the space were the family offices and the high net worths. Then you're starting to see more and more institutions come in. What's the journey there, and how far are we with that?
There again, I think we're just at the tip of an iceberg. And it's an iceberg this industry's been talking about for 10 years. So, all credit to the fact it's been predicted for a long time. But it is actually starting to happen now. There's big public pension plans that are very public about how they're investing in blockchain. Most of the major endowments have blockchain investments now. And the way I think about it is, you and I used to trade together in the 90s, and we've been through commodities becoming an asset class, emerging markets becoming an asset class. It's obvious to me that blockchain will be an asset class, and everybody's going to have a blockchain team, blockchain allocation, and I think it's going to be some number like 800 basis points or something, some number like that. And all the institutions that we have invested with us or with our competitors in the space, they have maybe 50 basis points or at most maybe 2% of their assets in blockchain. So my kind of construct is we've done a lot of work evangelizing for our space over the last 10 years, and we've gotten some institutions, but not even all, to go from 0 to 1. We got a no to become a yes, but it's still very, very small. And the trade for me is over the next 10 years, it's going to go from 40 basis points to 800 basis points. And that's just a lot of buying to happen.
Yeah, my view is there's that, which is the buying side. And then there's the retail adoption side as we build out use cases for the masses. And those two things, is how you get to the 3 billion number. And I don't know, my guess is it will end up being a $200 trillion asset class, which is in line with the size of other asset classes. And the adoption is fast.
Yeah, it's happening. There's a lot of good use cases, like especially cross-border remittance. That's such an easy one to get your head around. The average fee is 8% for remittance, and for us in finance, that's just a number. But like for the migrant, it's a month's wages that they're paying their remittance company. And so you already have 10% of all U.S. to Mexico remittance going over Bitcoin. That's great news. It doesn't sell newspapers, so they don't publish stuff like that because they like to publish bad stuff. And there's 2 million people using Bitso now. So there's a lot of traction, bubbling up. But again, we're going to billions in the next 10 years.